Good morning, everyone, and thank you for joining us for the Kogan Group's FY25 results presentation. It's a pleasure to be here with David Schaefer, our CFO, COO, and Executive Director, to share the results of what has been a strong year for the group, driven by the remarkable growth of Kogan.com. This year, we significantly grew our customer base, scaled our platform businesses, strengthened our core product offering, and converted that momentum into stronger cash flow. We welcomed 915,000 additional active customers, bringing the group total to 3.5 million, up 35% year on year. This strong customer growth benefited our revenue streams. Platform-based sales revenue increased 24% to over $111 million, and Kogan.com products revenue grew 15% to over $258 million. At the same time, we increased free cash flow by 40% to over $32 million. These are not just key highlights, they demonstrate the power of our business model: efficient, diversified, scalable, and resilient in any environment. Now that we've looked at the key highlights for the year, I want to take a moment to step back and remind you of the business model that underpins our performance. At its core, the Kogan Group is underpinned by two powerful strategies working together. The first is our product division. Here we sell a wide range of goods, both exclusive brands and third-party products, at incredibly competitive prices. What makes this possible is our direct-to-consumer model, where we source directly from manufacturers, cutting out unnecessary steps in the supply chain and passing those savings on to our customers. The aim is not to maximize margin, but to attract and retain customers by consistently delivering outstanding value. The second is our platform-based sales, where we leverage that customer base through our marketplaces, loyalty programs, verticals, and advertising. These businesses are capital light, scalable, and deliver recurring revenue at an attractive margin. So the formula is simple but powerful. Outstanding value draws customers in, customer loyalty keeps them engaged, and our platform-based model generates recurring revenue with attractive margins. This approach has underpinned Kogan.com's growth since its early years, evolving over time, but always anchored in delivering outstanding value to customers. It remains the key to our future growth and financial strength. As we reviewed our performance heading into the year, it became clear that the best way to consistently grow our earnings was to grow our customer base. And the best way to do this was through increased investment in marketing. From the second quarter, we deliberately increased our investment, focusing on high-return channels and value-conscious customers. This wasn't just about investing more, it was about spending smarter. By targeting the right audiences and leaning into channels with proven ROI, we strengthened our brand presence, extended our reach, and have set the business up for sustained growth. The results speak for themselves. Kogan.com active customers grew by more than 48% year on year, climbing to over 2.8 million at the end of FY25. That's almost 1 million additional customers choosing to buy from Kogan.com in a single year. And this isn't just a short-term uplift. By reinvesting in our core asset, our customer base, we're ensuring that our platform continues to scale, generating recurring revenue at attractive margin streams that drive long-term value. With that, I'll hand over to David, who will take you through the financial results in detail, including revenue performance, cost management, and cash flow for the year.
Thank you, Ruslan, and good morning, everyone. It's great to be with you today to walk through the group's FY25 financial results in more detail. As Ruslan highlighted, this was a strong year overall, underpinned by the performance of Kogan.com. At the same time, we also faced challenges in Mighty Ape, which we'll touch on as we go through the results. Slide 7 shows the group's results split between Kogan.com and Mighty Ape. Kogan.com, the group's primary business unit and the larger of our two reporting segments. It operates a products division, verticals, marketplace, the Kogan First loyalty program, and an advertising platform operating under well-known brands including Kogan.com, Dick Smith, Matt Blatt, and Brosa. Mighty Ape is headquartered in New Zealand and joined the group in December 2020. Mighty Ape offers a broad range of retail products, and in recent years, we've expanded its offering by rolling out a number of verticals and a marketplace under the brand. When we look at the group's results, the story is clear. Kogan.com was the driver of performance in FY25. Gross sales at Kogan.com grew 20% to $794 million. Gross profit increased 21% to $156 million, and adjusted EBITDA increased 13% to just under $37 million. By contrast, Mighty Ape fell short of expectations. Gross sales declined 7% to $137 million, with gross profit down 15% to almost $34 million, and adjusted EBITDA was a small loss. These results primarily reflect the impacts resulting from the migration onto the new Kogan platform in October 2024, which caused operational challenges during the most critical sales period and into the second half of FY25. More on this later. At a group level, gross sales grew 15% to $931 million, and gross profit increased 13% to almost $190 million. Adjusted EBITDA was $36.8 million, down 8%. This result was delivered entirely off the back of Kogan.com, with the challenges at Mighty Ape clearly weighing on the overall group performance. We will take you through the initiatives to turn around Mighty Ape's performance shortly. When we look at the breakdown of gross profit across the group, what stands out is the strength, quality, and diversification of the earnings. Almost 2/3 of gross profit comes from exclusive products and services that can't be directly replicated by our competitors. These include our loyalty programs, our exclusive brands, our verticals, and our advertising platform. These are recurring and highly defensible streams that deliver attractive margins. Even in competitive areas like marketplaces, we've built a scale advantage and capital-light model that drives customer choice and growing profitability. What this demonstrates is that gross profit isn't just growing, it's increasingly diversified and resilient, providing a strong foundation for long-term earnings. As you can see from the chart on the left, Mighty Ape's performance in FY25 was heavily impacted shortly after the platform migration in October 2024. The platform change involved migrating Mighty Ape from its legacy platform onto the next version of the Kogan platform. The transition was designed to enhance Primate loyalty features and enable the launch of a marketplace to broaden the product range and offering. Unfortunately, it created a number of issues too, which was compounded by the timing of the launch before the peak sales period. We faced site stability problems with regular downtime, feature disruptions like wish lists and click and collect, and a breakdown in marketing integrations, which played out through November and December, right across the Black Friday, Christmas, and Boxing Day sales periods. The result was that some of the inventory purchased for those peak events remained in the warehouse, missing the key sales window, and the business has been forced to discount heavily to clear that stock and reset product range ahead of the FY26 peak season. The good news is that 3 of the 4 key issues have been resolved. Site stability is largely back on track, key features have been restored, and marketing efficiency has rebounded as of late May. The final issue is inventory, which we are now clearing excess stock and optimizing inventory ahead of the FY26 peak season. We're confident this will be fully resolved by the end of the first half, positioning Mighty Ape for normalized performance from December. This slide shows the outcome of our decision to reinvest in customer growth in FY25. Marketing is one of our biggest discretionary levers, and this year we used it deliberately to accelerate growth in our most valuable asset, our customer base and brand. Seeing the financial impact of that decision play out in real time is critical for understanding the group's performance. You can see the shaded bars for our customer base, with the red segments highlighting net incremental growth each month. Once we lifted our marketing investment, customer acquisition accelerated immediately and continued through the rest of the year. By June 2025, Kogan.com had 2.8 million active customers. Importantly, this wasn't about chasing volume. Every additional customer strengthens our ecosystem, whether through marketplace, verticals, or our loyalty programs. More customers makes us a more attractive partner to sellers and partners, which in turn provides us with a broader and more desirable customer offering. That creates a multiplier effect, more customers, deeper engagement, and stronger recurring revenue. Turning to the balance sheet and cash flows, the group is in a solid financial position. We closed FY25 with $42.1 million in cash and no debt. Importantly, free cash flow increased by 40% year on year to $32.4 million, driven by the significant growth across the Kogan.com revenue streams and increased cash flow from the Mighty Ape inventory optimization. On capital management, we returned $11.1 million to shareholders through the ongoing share buyback, and we lifted dividends, paying 14.5 cents per share during the year. We did recognise a $46.3 million goodwill impairment related to the Mighty Ape acquisition. This is a one-off, non-cash write-down that does not impact the group's cash generation or ability to fund growth and capital returns going forward. Importantly, we remain confident that Mighty Ape will return to profitability as operational improvements take effect, and we see the write-down as a reflection of short-term performance rather than a change in our long-term belief in the brand or business. Overall, the balance sheet remains strong, we have generally healthy cash flows, and we continue to invest in ways to deliver value to shareholders. If you're looking for all the details of our financial statements, you will find all the details in the annexures. With that, I'll hand back to Ruslan to deliver our business update.
Thanks, David. I'll now take you through our business update, which delves into the many highlights we've achieved in the year. This slide highlights why Kogan.com holds such a unique position in the Australian and New Zealand retail market. Our customers are value-driven and tech-savvy. They know how to compare products, they know how to find the best deals, and they care about function and quality over brand names. High-status labels don't drive their choices. Real value does. Our customers are not bargain hunters looking for the cheapest option. They're value-conscious consumers who want the best deal without compromising on quality. And this aligns exactly with our purpose, helping customers live their best lives by delivering remarkable value. This resonates so strongly and is why our competitive position is so defensible. This slide is a reminder of the extent and breadth of Kogan's businesses. On the left, you see our products division, which includes Kogan.com and Mighty Ape. These are the more traditional retail businesses, representing around 42% of our gross sales in FY25. They're important because they bring customers into our ecosystem by delivering outstanding value across thousands of products. But what's really significant is everything to the right. Our platform-based sales. This includes our marketplaces, verticals, loyalty programs, and advertising platform. Together, these now represent almost 60% of the group's gross sales in FY25. Why is that so important? Because these businesses are capital light and scalable. They generate recurring revenue streams from our loyal customer base that grow faster and generate more attractive margins than traditional retail alone. So while our products division attracts customers, it's the platform-based sales that really power the long-term value of the group. That combination is what makes our model unique and why we're so well positioned for sustainable growth. Here you can see the performance of our platform-based sales over the last 3 years. Growth has been consistent and compounding. In FY25, revenue grew by 24% to $111.9 million. What's exciting is that this trajectory is only just beginning. In FY24, we launched Mighty Mobile, and in FY25, we introduced the Mighty Ape Marketplace and significantly enhanced the Primate Loyalty Program. All are in the early stages, but they represent significant opportunities to accelerate growth in the years ahead. So while the past 3 years have delivered strong, consistent growth, we're only just getting started. Kogan Marketplace, where third-party sellers advertise and sell their goods through our platform, delivered a strong rebound in FY25, with revenue up 34% to $29.4 million. The recovery was driven by two factors: increased marketing investment, which accelerated customer acquisition, and our continued focus on supporting top-performing sellers. By working closely with our seller base, we've improved product availability, broadened the range, and enhanced the overall customer experience. Marketplace is one of our most scalable models. No inventory risk, minimal capital, and it expands naturally as our customer base grows. FY25 not only marked a return to growth, but also strengthened the foundations for future expansion. This division is set to remain a key contributor to group performance. Kogan First has once again delivered a standout performance. Revenue grew 17.5% year-on-year to $51.3 million. What makes the program so powerful is the loyalty it fosters. Around 90% of subscribers are on annual plans, which speaks to the level of engagement and trust our customers have in the program. These members are not just loyal, they're our most valuable customers. In FY25, Kogan First subscribers drove close to half of our product gross sales, showing just how central this program has become to the group's success. This year we also launched Kogan First Max, a new premium tier of membership designed to give our most loyal customers even more value and benefits. It's still early days, but the enhanced features are already driving deeper engagement and encouraging members to spend more across the Kogan ecosystem. And now let's turn to the Kogan verticals, which delivered a record year of revenue in FY25. As you can see, the division grew 14.4% year-on-year to $22.9 million. Importantly, this growth was broad-based across all key verticals. Kogan Mobile grew 7%, continuing to provide great value in a very competitive market. Kogan Money grew strongly at 47%, led by our credit card business. Kogan Internet delivered 10% growth, and Kogan Energy surged 359% as it offered the best utilities pricing for most of the year. The performance of Kogan verticals demonstrates the power of extending our brand into categories that deliver recurring revenue and high engagement. These businesses not only diversify our earnings, but also deepen customer loyalty, embedding Kogan further into our customers' daily lives. Many of these verticals also integrate with Kogan First, with complimentary memberships offered to Kogan Energy and Kogan Money credit card customers, and additional benefits for Kogan Mobile subscribers. Kogan products delivered a strong result in FY25, marking a return to revenue growth and the second consecutive year of gross profit growth. Revenue increased more than 15% to $258 million, while gross profit increased nearly 23% to $48 million. We saw gross margin expand by over a percentage point, driven by better buying, stronger negotiations with suppliers, and disciplined inventory management. More than 72% of revenue is now coming from our exclusive brands, which gives us control over price, quality, and margin expansion. We're also seeing strong momentum in higher value categories such as home and living, appliances, and consumer electronics. Our average transaction value is now $159, up 7% year on year and nearly double compared to 2 years ago. That demonstrates our customers are not just shopping for low-cost items, but making meaningful, higher value purchases with us. So FY25 marks a turning point for Kogan products, and we are confident it will continue to deliver strong and profitable growth from here. This slide brings us back to the strategy I outlined earlier in this presentation. Our dual focus is on driving growth in platform-based sales while bringing the products division to break even. In FY25, platform-based sales delivered adjusted margins of around 50%, while group product sales were loss-making at roughly negative 4%. Operating costs were allocated between the two streams based on directly attributable expenses and management estimates. The group adjusted margin for the year was 7.5%. In the medium term, we aim to increase platform-based sales adjusted margins to 50 to 55% through operational leverage from revenue growth and a relatively fixed cost base, and progressively improve the products division from a negative 4% adjusted margin towards break even. That combination has the potential to increase group adjusted margins into the 8 to 12% range. Longer term, we aspire to drive platform-based sales beyond 65% adjusted margins, with products at break even. Together, that would drive group adjusted margins above 20%. So put simply, keep growing our capital-light platform-based businesses with attractive margins, bring products to break even, and in doing so, deliver significant financial performance at the group level. Moving on from FY25, I'm pleased to provide a July trading update. As in the past year, we will not be providing earnings guidance. Our priorities in FY26 include completing the turnaround of Mighty Ape. The ongoing inventory issues means that trading is expected to be challenging until December, with a return to better trading in the latter half of FY26. We expect to maintain the strong contribution from our platform-based sales. We plan to further optimize our operations and drive operating leverage, and continue to drive strong performance of our Kogan products and marketplaces. For the month of July, Kogan.com continued its strong performance, with gross sales of $70.4 million, up 32%, and revenue of $32.7 million, up 11.4%. As flagged throughout, Mighty Ape continues to work through its inventory optimization, with gross sales of $10.3 million, down 3.5%, and revenue of $8.6 million, down 20.9%. We expect group adjusted margins to be in the range of 6 to 9% for FY26, progressively improving in the second half as the Mighty Ape recovery is completed. Before I close, I'd like to turn to shareholder returns. The board has declared a final dividend of 7 cents per share, partially franked. Together with the fully franked interim dividend paid in April, this brings total dividends for FY25 to 14 cents per share. The final dividend is partially franked due to losses recorded in Kogan Australia driven by the Mighty Ape goodwill impairment. This reduced available franking credits within the group, lowering the franking level that could be applied. That said, the decision to maintain a consistent dividend demonstrates our strong cash generation and solid balance sheet. We remain committed to rewarding our shareholders, and the dividend reinvestment plan will again be available, with shares issued at a 2.5% discount to the market price. This concludes our presentation. At Kogan.com, we're always finding smarter ways to drive efficiency, and today's presentation is no exception. We've used AI to record our voices for today's presentation, a small example of how we're embedding technology across the business to save time, work smarter, and deliver more value for both customers and shareholders. On behalf of the board and our team, Thank you all for your interest in Kogan.com today. We look forward to meeting with many of our shareholders over the coming weeks. For those of you who have any questions or are interested in hearing more, please stay with us for the Q&A.